In this track and trade trading training video, I want to just take you through some different charts within track and trade and just look at them from a seasonal standpoint. Now, the first thing we're looking at here is the feeder cattle, and you can notice in feeder cattle we have, seasonally speaking, through feeder cattle we have kind of a low right in April, between May and April, and then in April it starts to generally have an incline again. And you can see that this is the feeder cattle contract, and it's kind of followed right along with that same type of a trend. We have kind of this little trend going on here. We kind of experience that same type of thing here. So you can see that feeder cattle has been following the trend or the seasonal trend quite strongly. So if we go to the next contract, let's go over here to cocoa. And you'll notice that cocoa again also has this kind of an overall trend, a drop, and then a climb into expiration. And of course you can see that this market followed that trend pretty much like a train on rails. So you see that that's more recent. You'll notice that that's the 10-year contract, the blue, so this blue background being the 10-year. The 15-year is the red line that you see in here. You'll notice that if we go back further in history, this time frame has actually been a little bit more sideways through here, and you'll even notice on the 10-year that it generally has a tendency to go sideways through this time period. Even though over the long trend it is up, we do have some generally sideways types of trends that happen during this time frame in that time. So we need to keep mindful of that. That's what we might be finding during those time frames. So let's go on to the next one. This is coffee. Coffee is a pretty seasonal commodity, and you can see that it generally has a nice uptrend starting right in October, and then this one of course followed suit, and then we see a gentle fall off in price, which again of course followed suit. So this is a general overall trend that we see in coffee during this time of year. Now, of course, the advantages of using the bulls and bears trading system that we have displayed up here on the screen, which changed the price bars from red, yellow, and green. Green, of course, is our bullish trend. Red is our bearish trend. And then, of course, we have our indications that the market is changing momentum. So this is what we look for in this time frame. We want to see a momentum change right in this time frame when we are anticipating a rise in price through the seasonal trend. And of course that's what we look for in our indicators to help us identify an entry point at the beginning of one of these seasonal trends. Now the great thing about track and trade is that this seasonal trend tool is actually forward looking. If we scale the chart back in time, you'll notice that the seasonals, because it is a historical view of the market, doesn't go away. I mean, we still have that sitting out there as a guideline indicating to us that we have this potential or possibility of an uptrend during this time frame. So when we get our buy, sell, or our indication that the market is changing into a rally point, this is what we're looking for. We're looking for this type of an opportunity. And of course, a lot of people always ask me, they say, well, how do I know when to load up on more trades? And of course, or more contracts. And of course, this would be a time that you'd want to load up on more contracts. When the odds are more highly in your favor, that you've got a nice trend in your favor, and you've got a signal indicating the market is changing into your favor, with the seasonals, that's the time that you would want to load up on more contracts rather than a counter-seasonal trend. So let's go on to the next one. Here's copper. Here's another nice example. Copper's quite seasonal as well. We generally see starting at the first of the year this rally point coming into here, into expiration in this contract. And you can see once again we have an opportunity where the market is changing over from bearish to bullish. And so we have a bullish indication with our bulls and bears indicator indicating that this market is ready to rally. And of course this is where we anticipate this rise in price, and this is what we're looking for in our market. Being able to watch that happen prior to it's actually happening and taking place, you can see that this market is going to rally, or is giving us the potential to rally into this uptrend. And so that's the opportunities that we're looking for, and using the seasonal nature of the market and the historical averages to give us an idea what we can anticipate over this next time frame. So let's go in and look at the next one. This is cotton. Cotton, once again, you can see that we have a nice little uptrend, and then of course a big drop off happens around March, and this is very common. It happens quite often, enough that it's created this type of a trend within our seasonal market. And of course you can see that we have this rally point here that's coming in right at the right point. We have this point here where we've got a little bit neutral or negative on the market, and then of course with this we go into another rally point, and this is where we have caught this nice big trend here. And then of course we anticipate this big blow off, and that's exactly what happened with this market into expiration. So again, here's another market, cotton, that riding that seasonal trend just like a train on rails. So let's go in, and not only does the seasonals work with traditional commodities such as cotton and copper and coffee and products that are planted at the same time every year, harvested at the same time every year. But also look at this. This is the Dow Jones. The Dow Jones also has a seasonal nature to it. And you can see here that the Dow generally kind of dips through this time frame, starting in January, and doesn't rally again until about April. Around April we have that rally point, or maybe even back a little bit further, mid-March, we start to get the rally point in the Dow. And it's happened often enough that it's caused this trend to occur over clear back in the 15-year mark and the 10-year mark. And here we see it once again with the rally through this time frame starting around March. So we start looking for opportunities to go long the market in the Dow around March, and that's where we get this type of a rally. And if we go back and we look just a little bit further out, now obviously this market isn't very active right now, but you can see that the trend a little bit more strongly in the seasonals trend here, starting more strongly with March all the way into mid-May. So this is always a good time for looking for buying opportunities in the Dow. And so let's go to the euro dollar. Euro dollar, again, a currency, not a traditional commodity, but something that has a very seasonal nature to it. Currencies are used at specific times of years, more often than others. So you can see that we've got this rally point and this trading activity that kind of follows this seasonal trend, the 10 and the 15-year average. Generally here in December, we start to see a rally, and then of course it drops off out into May, and then it goes sideways a little bit for a while. And of course, with the track and trade, we can move forward in time, and we can see an anticipation of what that market's going to do. So we can come over here, and now this market generally goes sideways. You can see starting in May into about July is probably generally pretty stagnant for this market, and then it starts to rally quite strongly into September. So we're looking for a rally point right in here. So with our bulls and bears tool, which is my favorite indicator, I will start watching for a changeover from neutral or from bearish to bullish around this time frame, and then we'll start looking for buying opportunities to go long the market in euro dollars sometime around July. Natural gas, again, another one that's very seasonal, of course, and we can understand why natural gas would be very seasonal. A lot of people heat their homes with it. And you can see that the price of natural gas generally rallies starting in the cold season, January into April. And this is another opportunity for us. You can see the bulls and bears coming in here with an indication the market's changing over from neutral, from this sideways market, this type of a trend, into this nice rally point. Now, a lot of people will continue to try and trade markets all year long. Time frames that generally are not very good time frames to be trading. For example, it's not a wise choice to be trying to find rally points and through this time frame in natural gas, simply because during this time frame it's generally going sideways. There's really not much of a trend. So this is where you're going to get chewed up and spit out, and you're going to lose a lot of your money if you're trying to trade through this time period. That's why the bulls and bears and the combination of the seasonals is so powerful. We look for and we try and find and we identify different contract months that have this type of a a trend on them. And when we see this type of a trend, a nice big move like this, this is where we start looking for opportunities to go into the market. And we use the seasonals to stay out of the market during time frames, during quiet markets like through July, August, September, October, and November with natural gas. Now here's RBOB, or the gasoline. This is unleaded gasoline. Again, very seasonal, has very seasonal nature to it. There's the driving season when everybody wants to go on vacation and drive their cars. And of course we have a nice big rally that generally starts in January into March, April, May. This is a very common rally point for gasoline. And so we start looking for opportunities to go long the market this time of year. Now notice that when we get a sell signal during this time of year, we're going to be very cautious. But you'll notice that we start looking for an opportunity to go long this market right around February. And here the Bulls and Bears is giving us a target point, the indication that this market is beginning to rally. And then we watch for opportunities clear into May. Now you'll notice that this contract continued to rise up into and past May. But we are now looking for a small pullback at this point. And so traditionally speaking, we do see a small drop off in price starting in May on this contract. So let's go out now. Let's look to gold. And gold is a very traditional commodity and has lots of seasonal characteristics to it. And one of the main characteristics, or one of the most seasonal patterns known within the markets, is this gold rally right here. And it generally starts right around August to September time frame. This is when we start looking for gold to begin to rally. And of course the majority of gold is used for jewelry, and this is the wholesale market, of course. And so this is when all of our wholesalers start buying gold for the Christmas season, looking towards this time frame here. And so what happens is that the gold buyers all start buying their gold up, preparing for their jewelry season for Christmas, when you give gifts of gold. Now we go into crude oil. Crude oil is another very seasonal market, and it has been for a number of years, and it has a tendency to rally. Even through all the strange price action that's been going on lately, it still has the tendency to rally along with the seasonal nature of the market. And so this big rally is nothing, not a real big surprise that we had a rally. The size of the rally is the surprise, not the fact that we had a rally. Because you'll notice that seasonally speaking, we generally always see a rally of price in crude oil starting around January. Very common. It's happened over the last 10 to 15 years, and we can chart it right here, and we can show you. So at this point, we start looking for the bulls and bears to give us an indication that it's time to get into the market to take advantage of this rally. And of course, we've got the buy signal right here, an indication the market is changing from neutral or bearish to bullish, and that corresponds directly and exactly with what we're looking for in the crude oil. And this is what gives us the opportunity to take advantage of this market. Next one is orange juice. Orange juice is another one that's has some very seasonal natures to it. And what we want to do is we want to take a look at orange juice here very quickly. You'll notice this rally point corresponds with this rally point. And of course in December is where we generally look for a blow off or a price decrease in orange juice. And of course this market dropped significantly during that time frame from December all the way into April, where we start to see it level off a little bit. And of course it did that exactly just like a train on rails right into expiration. So let's go into the S&P 500. Now the S&P 500, another market that you might not think is very seasonal in nature, but nonetheless has seasonal time frames that you can look at to see rally points. And of course, here's our same situation. It seems that in October, the S&P 500 has a tendency to begin to rise into March. So this is a rally point, and so we start looking for opportunities, again, to go long and to get into the market sometime in the October-November time frame and look for the rally or opportunities to go long the market, the S&P 500, through this time period. And of course, the S&P 500 as well has some stagnant times when you don't really want to be looking at the market and trying to get into it. And so as you can see, the seasonals can help us see and understand when those time frames are and when it's going to be a little bit more difficult to pull out some longer term income out of the S&P 500. So using the seasonal nature of the markets can significantly increase your odds of being right on the right side of the market. And of course, that's where we want to start loading up on our contracts and trading a larger number of contracts. So we come into the US dollar. The US dollar, again, very seasonal in nature. And you can see that starting around July, we generally see a drop-off in the value of the dollar. It's very common. It's happened over the last 10 to 15 years. Every year we try to kind of see this little drop-off, and here it is again. And so we start looking for an opportunity to go short the dollar around July, mid-June. Here we are with the bulls and bears coming in and giving us that indication that the market is starting to fall off. Notice this little bump in here. Seems very indicative of over about the last 10 years that market's done that often enough that it's given us this little peak. And again, this year it's given us that little peak, which is pretty amazing. And then, of course, it drops like a rock, and we take advantage of that, again, using our bulls and bears to indicate that the market has changed momentum. Let's go into the UST note. Now, this is my favorite market for seasonal indication of all the markets, period. This, hands down, is the most seasonal market I've ever seen. And it is the December contract, and it is unbelievable how seasonal and how predictable this market is. As you can see, this market begins to rally right around the June-July time frame, and we watch it rally all the way into expiration, clear into December. And the bulls and bears once again is coming in with our indication. We're looking for the buying opportunity. Here it is, and away we go. Of course, we have a little bit of stagnation coming in after we make our little pullback, which is very traditional, and then the market continues to rise once again. And over the last 10 years, once it gets into October, the continuation of the rise into December is not nearly as strong as it is from January to October. This is generally the stronger rally point, but we generally continue with a rally further out as well. And, of course, the bulls and bears helps us with that, identifying that point as well. But we also understand that markets move in waves and that they don't go straight up, although this is the closest thing to straight up market I've ever seen. But we have this small pullback, and then the market begins to rally once again as we project out into the future the actual expiration point. So there's Track and Trade going through and just quickly taking a look or a glance through some of my favorite markets and how they reflect through the seasonals using a combination of tools, the bulls and bears, to give us indications of market momentum and at what time of year we should be paying attention to that type of a move.
The content of this program does not constitute investment advice. This program is to help enlighten you to the opportunities for further education and training techniques by industry leaders. This should not be considered as a solicitation to buy, sell, or invest in securities, options, futures, or Forex. Remember, trading does involve the risk of loss. Past performance is not indicative of future results. Stocks, futures, options, and Forex trading is not suitable for every investor. Please consult a professional regarding your financial situation before placing a trade.